Well, joining us now from the trading floor at Nomura is the bank's chief European economist, Peter Westaway. Peter, good to see you. Thanks very much for speaking to us. So, we've been hearing from G7 countries saying that they're going to take every action necessary to stabilise the market. So they're very thin on detail, no concrete measures announced. What should they be doing?
Well, to me, the absolutely critical issue has been the sovereign debt crisis and the fact that there was contagion to Italian and Spanish yields. So, to me, that was the key issue they needed to address. And I think the ECB announcing and then delivering on that this morning has been absolutely crucial. So we've seen those yields coming right in, and I think that's going to provide a bit of confidence that the sovereign crisis isn't going to go systemic in the way that it was threatening to.
So you've said so far so good for the ECB bond buying plan. These reports that we're getting that they're in the Spanish and Italian markets now. But in terms of the long-term problem, I mean, we're seeing, borrowing costs coming down a little bit. Is it likely to last? What are the long-term risks?
Well, I mean, in the short term, where I mean really to September, what the ECB needs to do is provide a bridge through to September when the EFSF, in other words, the governments, can come on stream and start providing funding lines to Spain and Italy if needed. They may not be now, but also potentially for the EFSF to start buying yields. Now, there's still a question mark over whether that will work, because one of the problems is if the EFSF does get needed, it may not be able to cope with, may not be able to digest Italy, and it may start to undermine some of the AAA creditors as well. So if that were to happen, then it may require the ECB perhaps to do something even more radical. Or the alternative, it might be that we need to start introducing a eurobond. That's something that people have been talking about. So far, there's been political resistance, but maybe that's the key policy measure that's going to really get us out of this problem.
Do you think the markets will force them into that prospect sooner rather than later? And we've been speaking about eurobonds for so long now, but I mean, could that actually happen this year?
It could. I mean, it's possible that the measures that are in place at the moment are going to be enough to bring yields down, and if that were the case, then what policymakers were trying to achieve after the Eurozone summit, which was to keep the sovereign crisis ring-fenced to Greece, Portugal and Ireland, and Spain and Italy were then okay. But yeah, if it doesn't happen, then I think the game will need to be raised, and eurobonds may need to come onto the agenda. But what tends to happen in these crises, what's happened so far, is that the radical steps are only taken when policymakers are forced into a corner. In a way, that's what we've seen with the ECB's measures over this weekend. I mean, the ECB, I think, ideally would have done this on Thursday, this S&P buying of Spanish and Italian bonds, but I think they held their ammunition and waited to see a concrete commitment from the Italian and Spanish governments to bring some of their fiscal measures forward. And now that that's happened, or at least the intention has been stated, then the ECB have stepped up.
It's funny, you speak about authorities being a little bit behind the markets, and I guess the worrying thing now is that we're hearing increasingly about France and the premium that country pays over German bonds. That's been widening as well. If Spain and Italy can run into difficulties, what about France?
Well, I mean, we don't really think Spain and Italy fundamentally have an insolvency problem. It's just that you get these self-sustaining these self-sustaining debt crises that when interest rates go up, that of itself makes a country at risk, and that's why it's so important to bring their yields down. The problem for France is if they start taking on the credit risk associated with Spain and Italy. I mean, we've done some calculations that even if France does take on that credit risk, it's still not entirely clear that they really deserve to be downgraded. But even so, I mean, I don't think it would do any harm for France to start making a bit more noise about the fiscal measures that they could be taking.
Peter Westaway of Nomura, thanks very much. Good to talk to you and get your analysis.